Good morning and welcome back to Almus Market Mornings. It looks like we have a busy week ahead with several key data releases lined up across major economies and markets, closely watching the interest rate decisions from the ECB and Bank of Japan later this week. And on Friday, we saw a couple of interesting market movements as silver surged to a fresh all time high and gold coming close to its high before both the metals sharply corrected overnight after the CME raised margin requirements. Meanwhile, the USD INR continues to make new highs, followed by the inflation rate in India, increasing by almost three times in November, as against a record low of 0.25% in October. Good morning, Jayaram sir. What is your outlook on these developments, and how can we see them further develop based on the packed economic calendar this week?
Good morning, Eshan. Last week was quite eventful in terms of market movement. Of course, the major event was the Fed rate decision, and since the rate cut in Fed by 0.25% with a kind of neutral statement from Powell, uh, we have seen the dollar weaken, but surprisingly, the stock markets have been kind of subdued. Particularly, the Nasdaq has lost quite a bit, and the yields have also risen. The rise in yields also can be attributed to too many issuances due from the government, next week, and outlook on inflation coming up in this week, as well as the employment report. So the dollar was weak, but on the other side, dollar was stronger, or I can say a new high against the rupee, and we were at 90.55 at one point of the day on Friday, and with no apparent, you know, new development in fundamentals. Market is still, focused on the trade deal, which is elusive. We still continue to hear, you know, kind of confusing statements about when that will happen. On the one hand, we had a minister saying that we should not put a timeline for concluding the trade deal, and at the same time, the you know there is also a statement which says that it can conclude by March. So I think market is now almost not uh, hoping that a trade will happen immediately, and therefore we are having a situation where the demand is high. There is no flow. FI flows were negative once again, more than 1 billion last week. Therefore, rupee, not surprisingly, hit a new all-time low at 90.55. Going forward, of course, we will see whether RBI makes further new intervention efforts to keep the rupee weakness in check. And as far as Indian CPI is concerned, yes, you said that it went up by 200%, but then it's a very low base from 0.25 to 0.71. But the absolute number is so low that market is now tending to revise down even RBI's projection of 2% inflation for the full year 2026 if it continues to be in this lower range. So that probably will also lead to some debate on whether RBI will cut again when they meet next, or the meeting of next. Of course, for rupee, this makes no difference. One point I would like to make is that, in any major economy, if inflation were to be low and sustainably low and growth sustainably high, it would be called a Goldilocks scenario. And, investors will be attracted to such an economy. It could even lead to, revision in the outlook for or upgrading of the economy as well. But none of that seems to be happening as far as India is concerned. Investment continues to be elusive, and the markets are still under pressure as far as the rupee is concerned, and the stock market, of course, unable to break into new highs. Still very much rangy. So India will, of course, also see the WPI inflation number come in this week, and more crucially, the trade data for November will also be published. Last month we had seen a record high of 41 billion in the trade number. So it's a packed schedule for India as well. And for the global markets, US data would be the most important number. CPI both on headline and core, expected at 3.2%. That is not comforting many Fed members. On Friday, we had seen a host of Fed members now once again speaking cautious language about rate cut. Some of them, one of them was a dissenter as well. And so I think, again, doubts arise about, further rate cuts by the Fed, and with growth also not slumping. I think market is now started to believe that there can be no immediate rate cut by the Fed, and the dot plot already indicated only one rate cut in 2026. Let us see how things pan out. We also have retail sales number for October and November, and more importantly, the updated situation on employment. The non-farm payroll expected to come at 35,000, and the unemployment rate remaining at 4.4%. So, how much the market and the data deviates from these expectations will determine the market. Staying on the global market, we also have, of course, the ECB rate decision. There's no brainer. It's a no-brainer that they're going to be holding the rate. The data as well as statements from ECB confirm that. But BOJ is still a toss-up, I would say, because there has been some mixed data from Japan. They will remain, bit cautious. But as of now, the market is discounting a rate hike by BOJ. Um, but this time around, I don't see yen strengthening much on the basis of a rate hike, even if it does happen on the 19th. We also have a host of data coming up from UK, the inflation number and the employment number. In Europe also, we'll have the flash, PMI numbers that will be seen closely. Even as euro continues to attract good buying even at higher levels. So that's keeping the dollar index also at a lower level. So we think that this coming week probably be the busiest week before we close the year. And of course, as you said, the metals market is not sleeping. It's really keeping everyone, at least the commodity traders, on their toes. Huge volatility seen both in gold and in silver. Talk of CME raising the margins, and it doesn't look like the trend will change immediately for both these metals, even with the increase in the margins. But yes, high volatility will sustain because now market is not seeing too many short-term traders. I think short-term traders are actually away from the market now due to high volatility. It's only the big players, and it's really very interesting. Markets have, for instance, silver has already moved up, or rather gained more than 100% this year, and gold has also gained substantially. So I think at these levels, whether they still find it to take it higher, it's only a matter of if someone is short, they could buy more. Otherwise, I think there will be a caution about buying more. As far as the rupee is concerned, till the situation changes on the flow part, and also the trade deal, any new development positive side, without that, I'm not seeing the rupee making any major recovery. Last week we had mentioned about 90-30 being a good resistance point on the charts, and that has again actually been broken on Friday, and it has sustained above that. And if it sustains for a couple of days more, I think we are in for a test of even higher levels. And with RBI not really intervening in a big way, I think it's not inconceivable to see the dollar rupee test even newer highs at 91 or so. And of course, the lack of flows will be a major factor which will keep the rupee on the defensive side. Yeah, thank you.
Thank you, Jayaram sir. And just to summarize, the market movements that we saw last week were majorly with respect to the Fed rate decision, as they keep a neutral statement, which resulted in the dollar weakening, and even the stock markets and the yields in US were affected. And we have a lot of data points coming up this week with respect to the US data. We have the CPI inflation numbers and also the unemployment data, and the CPI is expected to be at 3.2%. And most importantly, it arouses a lot of doubts for the Fed for their future rate cuts, as the growth is also not rising. the Bank of Japan is expected to hike their rates, but the yen is not looking like it will strengthen with respect to this decision being made. And huge volatility continues to arise in gold and silver. And the new margin requirement stock, which increases by the CME, it does not look like the trend will change with respect to this new information. And when it comes to dollar rupee, the major factor that is driving this upward trend is with respect to the lack of flows, which also seem to be negative this week by almost $1 billion. And even the RBI is not present in the market to, protect these levels. And we could see another test for a 91 this week as the key resistance at 90.30 was broken. And let's see this week whether it sustains with also with respect to the packed economic calendar we have. Thank you so much for listening, and we'll catch up tomorrow with a fresh round of updates.